Welcome to The Explainer. Today, we are diving straight into the wild world of crypto, where, let's be honest, the signals are all over the place. On one hand, you've got this incredible hype, these super bullish headlines. And on the other, well, the data is telling a much more cautious story. So let's break it down.
Right, so on one side, you open up your newsfeed and the headlines are just screaming success. They're painting this picture of explosive growth and massive adoption. But then, if you look under the hood, a deep dive into the actual data is flashing some pretty serious warning signs. So, which story is the real one?
All right, so first up, let's talk about the bull case. This is the story you're probably seeing everywhere, the one that makes you feel like this thing it can't be stopped.
I mean, get this, we have entire countries literally rolling out the red carpet for crypto investors. El Salvador offering thousands of free passports. That's not just a small news item, that is a huge signal that this is going mainstream at the government level.
And listen, it's not just about feelings or hype. The actual technology underneath it all is absolutely roaring. When a newer platform like Base starts doing more transactions than a giant like Ethereum, well, that tells you people are actually using this stuff and in a really big way.
And you know, this whole boom isn't just a Bitcoin story. Not at all. The entire crypto ecosystem is getting bigger and more complex. We're seeing major new listings for coins like Shiba Inu, new protocols getting integrated on established platforms like AV. The whole space is it's growing up. And of course, you absolutely cannot ignore the mind-blowing price predictions coming from major players in finance. When a really respected voice like Cathie Wood comes out and puts $1 million price target on Bitcoin, yeah, people listen. I mean, they really listen.
So with all this good news piling up, governments getting on board, real tech growth, these insane predictions, it feels like a no-brainer, right? Like, how could you possibly lose? But what if the hard data is telling a completely different story?
Okay, so now let's flip the coin. One market analyst is basically sounding the alarm, warning everyone that the recent recovery we've seen might just be a bit of a mirage. The theory is that Bitcoin is still out there trying to find its true bottom. And this analyst is cautioning everyone not to expect some quick, magical snapback to the all-time highs. I mean, if you look at the history books, these super fast V-shaped recoveries, they almost never happen after a huge peak. The data really suggests that finding a real market bottom is a much slower, more drawn-out process that could easily take months.
So here's the deal. The crucial thing is to look past the hype and the headlines and actually understand what the underlying data, the on-chain data, is telling us. So let's dig into 3 key metrics that are showing us what's really going on under the hood.
Okay, first up, we've got something called the Z-score. Now, don't let the name scare you. Just think of it as a simple gauge. All it does is tell us if Bitcoin is looking cheap or expensive compared to its own past performance.
Right now, that gauge is deep in the cheap zone, and historically, that means a bottom is starting to form. But, and this is the really important part, this is not a buy tomorrow signal. It's the start of a whole process that, based on past cycles, usually takes, 2 to 4 months to fully play out. All right, next up, there's this really interesting algorithmic chart. It's got a pretty solid track record for timing these market cycles, and it uses these little white dots to basically flag when a bottoming phase is getting started.
And what this chart is showing us right now is, well, it's pretty clear. We're probably at the beginning of this bottoming phase, not the end of it. See, the white dots are only just starting to show up, and historically, that points to a 3 to 5 month process, with the analyst targeting a price somewhere between $48,000 and $52,000 before a real bottom is in.
And finally, let's check on the financial health of the people actually holding Bitcoin right now. There's a metric called supply and profit, and it just tells us what percentage of all the Bitcoin out there is currently worth more than what it was bought for. So right now, that number is 55%. Why is that a big deal? Well, because historically, the real market bottoms, we're talking maximum pain when everyone wants to give up and sell. That happens when this number gets way lower, like down in the 40 to 45% range. We're not there yet, not even close.
Okay, but here's where the plot really thickens. This is where things get super interesting. Because while all of this data is screaming, be careful, the big institutional players, the so-called big money, they are doing the complete opposite.
So what you have here is this total disconnect. On one side, you have the short-term data analysis, which is suggesting a long, slow process and advising patience. But on the other side, you have these huge institutions which have a much longer-term view, and they are buying aggressively.
And I want to be crystal clear here, we are not talking about small pocket change. You've got MicroStrategy constantly adding to its massive pile of Bitcoin. Binance is actively buying for its billion-dollar fund, and the Bitcoin ETFs have flipped from selling back to buying. They see this dip not as a crisis, but as a massive buying opportunity.
So you're faced with these 2 completely conflicting stories, the cautious data versus the bullish big money. What on earth are you supposed to do with all of that? How do you even begin to think about your own portfolio?
Well, the key takeaway from the analyst's point of view is all about managing risk. First, diversify. Don't put all your eggs in the crypto basket. Second, maybe limit your crypto exposure to just 5 to 10% of your total portfolio. Third, as market hype dies down, focus on projects with real-world use cases. And finally, consider structuring that smaller crypto slice with a heavy focus on the big two, Bitcoin and Ethereum.
So, at the end of the day, the market is telling two completely different stories at the exact same time. You've got the hype from the headlines and the conviction of big money on one side, and on the other, you have this very cautionary tale being written by the data. The real question isn't just which story to believe. It's understanding that the tension between them, well, that is the story right now. And navigating that is the real key.